The market's rallying. Dow up almost 100 points. This is Dez here at Grok Trade. This video is good for Tuesday, June 19, 2012. Dow up 95 plus points, up 0.75%, 1% in the green on the S&P. Nasdaq up more than that and almost up 2% here on the Russell. It's not too shabby. And really strong bank movement here. Big hopes out there in the trading world that tomorrow's Fed talk is going to bring some QE3 wishes and bring them to fruition. I'm not so hopeful on that. VIX actually showing fear, up 0.33%. Gold drops 50 or a half a percent. Silver drops almost a full percent. Crude oil up 1.15%. Interesting to see commodities mix like this. It's been, going on recently. Big drop in the US dollar, down 0.75%. I would have thought we would have had a bigger move here today. And at one point we were up, I think, 130, 140 points on the Dow. And a lot of that was due to this major drop in the US dollar. But the trend, a large part of today in the morning, was in bearish territory. And that was money flowing into declining stocks, or volume rather, flowing into declining stocks, outweighing the volume flowing into advancing stocks. Transportation doing fairly well here, giving credence to the move that we're seeing in the Dow. And utility sector, which is a defensive sector in negative territory. Taking a look here, we had a nice pop. We are finding resistance at the 100-day simple moving average on the S&P. The other area we're looking at here is 1360, and that line's been drawn back a ways. And that was this swing low, which is around 1358. And we come across and we close at 1357, well, 1358 if you round that up. We're at a resistance point. The question is, will the Fed's talk tomorrow be enough to send us to this upper trend line? And that would be a pretty sizable pop if we were to do that. It'd be roughly a 200-point move in the Dow to get up there. And that could certainly happen, but we're really extended at this moment. Furthermore, if I go to the weekly chart, check this out. We have this double top drop. Now we have this pullback to condensing candlestick sizes, and we're smashing our head on the 20-week moving average. 20-week moving average right now is acting as resistance, and to be quite frank, this is a beautiful bear pullback looking for a drop. So if we make a new low, if we get down here below 1333, so mark that number down, 1333 or lower, look for another leg to the downside. And these are all weekly candlesticks. On the monthly side of things are looking hunky-dory here. But we're only the 19th day into this month. If we do drop on the weekly, this is going to come right back down. Would not surprise me to get a doji at this support level going into July. So this green that we see here on the month may disappear, and fast. We're at a resistance level coming across to this level. If you look at this level right here, this is acted as major resistance before this crash. We are right now hitting our head against that very level. So again, this green candlestick, by the time the month is over, could disappear and give us a doji. Or it could obviously go lower. That stems again from this weekly pullback and a drop. For you Fibonacci guys out there, let's draw from extreme to extreme and show you this. We stopped for the week so far. We're just getting started, but we are at a crucial area where the 20-week moving average is, which is our 61.8% Fibonacci area. That is a huge area for the fibs. So that's where we are at. Get the very best of technical analysis here at Grok Trade. Looking forward to all those joining us in Vegas for the live mentorship and the advanced mentorship this next week. And a lot of you, you'll notice, well, maybe you won't notice, but we've told several that know this past month that you're not right fits yet. And let me help you. The reason you're not right fits for our program is because you're not ready for mentoring yet. I highly recommend that you go through the 201 courses. If you are a beginner, do the 101s, but those very basic, very beginner. The 201s or the more advanced technical analysis that gets into how to trade. So I highly recommend that you get the 201 courses. It's going to take you 6.5 hours to go through. It is a home-based study. So take the home-based study, and then you can make a decision whether or not mentoring is for you, and you will certainly be ready at that point. Take care. Safe trading to each and every one of you.